Welcome back to Finance in Focus. I'm Brady Hansman. Today we're breaking down the brand new CPI inflation report that was just released and what the data is telling us about the economy right now. At first glance, the numbers look fairly calm. But when you dig a little deeper, there are a few things developing beneath the surface that could change the inflation story very quickly. So in this video, we're going to cover three things. First, what the CPI report actually showed. Second, what parts of the economy are still driving inflation. And third, the one factor developing right now that could push inflation higher again. So let's get into it. Before we talk about the numbers, it's important to understand what CPI actually is. CPI stands for Consumer Price Index, and it essentially is the government's way of tracking how much the cost of living is changing over time. The index measures a basket of everyday goods and services. People spend money on including housing, groceries, gasoline, healthcare, transportation, and utilities. By tracking how those prices change month to month and year to year, economists get a picture of how quickly inflation is rising or falling across the economy. And this number is extremely important because the Federal Reserve watches it closely when making decisions about interest rates. Now let's talk about the actual numbers that came out in the latest report. Consumer prices increased about 0.3% for the month, which was roughly in line with expectations. On a yearly basis, inflation is running around 2.4% compared to a year ago. So on the surface, that's relatively stable. Inflation has come down significantly compared to the higher levels we saw a few years ago. But core inflation, which removes food and energy prices, is still slightly higher, meaning inflation hasn't completely disappeared. One of the biggest contributors to inflation continues to be housing cost. Shelter and housing related expenses remain one of the largest components of CPI and continue to add pressure to the overall inflation number. We also saw increases in some food categories, including beverages and packaged foods. At the same time, other areas cooled slightly, which helped keep the overall inflation number relatively stable. So when you look at the report overall, it's really a mixed picture. Some prices are rising, others stabilizing, and inflation overall is holding fairly steady. But here's where things start to get interesting. The CPI data that was just released largely reflects prices before the recent rise in energy prices. Oil markets have been volatile, recently due to geopolitical tensions in the Middle East, and higher oil prices can quickly move through the economy. When fuel costs increase, it can affect transportation, airline tickets, shipping expenses, and even food distribution. So if energy prices remain elevated, economists believe inflation reading in the next couple months could move higher again. Naturally, the big question many people ask is what this could mean for interest rates. Now, the Federal Reserve has been working to bring inflation down while also trying to avoid slowing the economy too much. With inflation moving closer to the long-term goal, the Fed will likely continue watching the data carefully before making policy changes. Markets will be paying very close attention to upcoming inflation reports to see how these trends develop. So stepping back and looking at the bigger picture, the latest CPI report tells us a few things. First, inflation cooled significantly compared to where it was a few years ago. Second, certain areas of the economy, particularly housing and food, are still contributing to the price increases. And third, developments in energy markets could potentially influence inflation data in the months ahead. So while the headline numbers look relatively stable right now, the situation can still evolve depending on how these factors play out. And before we wrap up, just a quick reminder, this video is for educational and informational purposes only and should not be considered investment advice. So if you found this breakdown helpful, make sure to like the video and subscribe to the channel so you don't miss future episodes of Finance in Focus. Thanks for watching, we'll see you in the next time.